Hello, everyone. I'm Larry Mellon, Vertex Director of Tax, a part of our Chief Tax Office. We welcome you to our newest episode of our series, Larry Live, Tax Talk for Tax Professionals. On each episode, we will discuss tax topics that tax professionals should be aware of, include on their ongoing tax strategies, and to share the latest trends in the tax landscape. On today's episode, we're joined by Ted Mirenda, Director of Tax Research here at Vertex. Ted will help us navigate the path of using tax data and research to devise a forward-thinking and proactive tax strategy. Welcome to the show, Ted.
Thank you for having me on the show today, Larry. One topic that just about every business likes to talk about, but perhaps doesn't fully or effectively utilize is data. Our businesses generate a ton of data each day. But if we aren't properly analyzing and applying the insights we can derive from the data, we simply aren't doing our job as tax professionals. What I find exciting is how through technology, we can better utilize data for predictive analytics and making educated recommendations to our business leaders. As you frequently say on the show, Larry, it's not just knowledge and technology. You have to be willing to blend both innovation and expertise together to create a successful strategy.
So true, Ted, so true. So let's dive into the conversation then. When looking at this tax data, what should tax professionals be looking at to be more effectively leveraging their tax data as part of their tax function?
You can have an immense amount of data, but ask any tax professional and they will tell you that data analytics are only as good as the data they're built upon. Think about building a house or a building. If you have a shaky foundation, your structure won't stand. The same concept applies to your tax data. If you don't have clean data based on accurate information, how can you use that information in an audit, compliance report, or for strategic planning? Now, that being said, I want to be fair and address the other challenges facing tax professionals. And that is the reality that while they are asked to manage a company's audits, they oftentimes don't have control of the process that feeds the information for the audits. This disconnect can be troublesome and lead to an increased audit risk. Larry, you know firsthand the solution for this challenge, tax engines. Tax engines are being better utilized by organizations around the world to promote controllership and risk mitigation, helping tax teams improve their tax data accuracy and tax calculations. It goes without saying, another key benefit of automating your tax calculation and determination process is that it helps reduce and even eliminate manual data errors. Simply put, the control of tax data should reside within the tax department.
Yeah, it's also true, Ted. And as we go through each of these sessions, we do talk more about that risk. And I think that's a lot that tax professionals, some overlook, some spend a lot of time on it. But, one area that tax professionals spend a lot of time is managing that whole potential risk as overall. But let's discuss a few examples of tax risk that, using data in your strategy and technology can prevent some of these challenges, right? So for one, have an automated process, right, to reconcile your ERP data to your tax engine. That's key to making sure that you're taking it from one system to the second system to make sure you have that information accurate before you go into any of your compliance operations, right? A periodic review, right, or reverse audit, which is a term I use all the time, on your tax decision-making process, right? Has taxation changes, what has been done since your last review. We often go through that and say, we have updates from tax engines that tell us what new information is out there. But how often do you go through your process to ensure that you're doing the accurate, and no changes have taken place and you need to look at your accurate taxation? But many tax professionals spend less time, right, reviewing purchases, right? We talk about this risk. And their primary focus is on sales tax, right? Someone in a tax department is concerned with the tax that's going on of the products they're selling, and they spend a lot of time on there. But what happens is a lot of times on the purchases, the use tax, right, make up a significant portion of the risk that's out there, and a lot of times they don't look into that. So Ted, let's kind of talk a little bit more about the procurement side.
Sure thing, Larry. Let's look at procurement. For businesses, procurement plays a critical role for contract negotiations, risk management, and working with vendors. However, from an indirect tax perspective, if you aren't using the right data as a reference, you could be looking at potential audit issues, such as underpayments of tax. So it's very important to make sure that your purchase information is accurately classified. While folks watching might think this is not a common concern, without a data-driven parameter or reference in place, how would you know if you under or overpaid tax? What historical reference would you have? How could you research to confirm any outliers? Another area of potential concern, Larry, would be on the revenue side. What happens if a tax team doesn't charge a correct tax rate? You have the data to support not collecting sales tax on a transaction. Can they support the rate charge or validate the certificate on file? These are all questions that, if not properly answered, could certainly lead to audit assessments.
Yeah, it's so true, Ted. All those things you said, all the different facts that you gave about regulation and stuff like that is things that everyone has to consider. So, as I spend a lot of time, working with companies and how we can reduce this risk, I think most tax professionals look at the regulatory changes as the driving force for their audit opportunities, right? Not the internal process, right? They spend a lot of time looking and saying, what has changed in the tax world? Has something I sell changed? Is a jurisdictional change? But they don't look at that internal process, right? To start determining whether they have inaccurate data or the lack of data as a reference. But let's move through some purchase reports, Ted. What are some data concerns that could arise on purchasing reports?
On the procurement side, Larry, what I've done in my career is really look for audit exposure and risk, and there's a number of ways. You can look for outliers by general ledger account, cost center, by jurisdiction, or even by the vendors that you're working with.
Yeah, I think that's key, because we can look at that and kind of go through and say, where do we see the risk? Do we look at larger general ledger accounts? Where do we have a significant spend, right? Do we want to go look in those areas? Do we do it by jurisdiction because we now find that we're being audited in that particular state, or we set up a new operation? So looking at those things and trying to analyze how you can look at those things would be key. But can you share some thoughts around variance reports and how they come into play for the tax data and the tax space?
Sure, Larry. Variance report will call out any invoice where the tax charged by a vendor was different than the tax calculated by the tax engine or tax team. These reports can have guardrails or criterias. They could either be percent-based, say for example, anything a 5% variance, or the variance itself could be, say, greater than $10,000, depending upon your company's risk tolerance. These I've found very helpful in my career when looking at those types of reports. To dive deeper into this type, a tax professional would be able to identify transactions where relevant differences so the taxpayer could validate they were paying the correct amount of tax. Where vendors classify transactions as taxable, the taxpayer believed they were not, based on either our statutory interpretation or maybe the company taking an aggressive position. In other areas where vendors were charging tax on non-taxable purchases, the taxpayer simply needed to send them a resale or exempt certificate. Finally, the report proves very useful, and the goal was to clean up anything significant on the purchase side, eliminating overpayments, as well as identifying potential audit issues before you were under audit.
Yeah, there's 4 points are really good, Ted. Thanks for that. So to add some context to the variance report topic, right? All of this plays into my thoughts around reverse audits. Again, I bring that up before. Just because a vendor provides a customer with an invoice with sales tax doesn't always mean it's correct, right? Depending on whether they're charging the rate of where they've shipped to or where they're sending it from, is it origin, destination? All those things play into that. But those purchases need to be validated to ensure accuracy, right? A continued area that also needs a deeper dive. Many customers don't review or even bother to look at the invoices that have sales tax on them, right? If there's sales tax on it, they assume it's okay. But these invoices potentially are taxed incorrectly, as I said, and may just be as simple as a wrong rate. So are there any other top of mind uses for tax data that you'd like to cover today, Ted?
As a matter of fact, Larry, we do see another use we like to call a back-end check, or belts and suspenders term. This approach is a support mechanism to help identify relevant outliers in the data. This will come into play when prepping for an audit. It also could help serve as a continuous review of internal processes. This is really useful for organizations that have decentralized tax teams or multiple AP teams.
That's great, Ted. I agree with you. Yeah. So all this information we discussed today, certainly needs further review. We need to dig into this more. For your tax team, you need to take it back and determine, are these areas that you could improve? How are you using this tax data and research to assist with forward-thinking and proactive tax strategy? So with that, Ted, that's all the time we have today. Thank you for joining us today, Ted, for the deep dive into the tax data world, right? Hopefully, we were able to illuminate new areas of opportunity for those watching. And always, thank you for joining us today for another episode of Larry Live, Tax Talk for Tax Professionals. See you soon.